If you are a real estate investor looking to tap into the equity of your income generating properties, a DSCR or debt service coverage ratio HELOC might be exactly what you need. Now, unlike a cash out refinance, which refinances the balance that you owe on the mortgage and pays a difference in a cash lump sum, a DSCR HELOC is a revolving credit line that allows investors to access the equity in the rental properties with a lot of flexibility. Now, in this video, I'm gonna go over the DSCR HELOC program for real estate investors, the main qualifiers, and the main benefits and drawbacks of it so that if you're considered doing something like this, you know exactly what to expect. Now, what exactly is a DSCR HELOC? Well, DSCR stands for Debt Service Coverage Ratio, which is basically the measurement or the ability of your property to generate enough income to cover its debt payments. In more simple terms, is the amount of cash flow of the property. And if you want to calculate the DSCR of your property, you'll take the rental income that the property generates and you'll divide it by the monthly payment of the property, which includes taxes, insurance, and any HOAs. Now, for example, if your home rents for $4,000 a month and the payment of it is $3,200 a month, your DSCR is 1.25. Now, what exactly is a HELOC or a home equity line of credit? So a HELOC is a type of loan that allows you to borrow against the home equity of your property. They're basically second mortgages. If you already have a mortgage on it, then this is somewhat going to be a hybrid between having a credit card and a checking account at the same time, and it will be a second lien on the home. So it's sort of like a credit card because it's a revolving line. So you'll have a limit of say $100,000 available, but if you don't use it and you don't have a balance, then you don't really have a payment. So it works just like a credit card. Your payment is based on your balance, your interest rate, and the repayment period. And it's kind of like a checking account because you have access to it, to your home equity in the form of cash. Like you're gonna get a checkbook from your HELOC lender, and from it you can withdraw money from an ATM because you'll even have an ATM card. HELOCs are typically used for large expenses such as home renovations, paying off interest on debt, or in the case of many real estate investors, just maybe even for other investment opportunities. But the best thing about a HELOC, in my opinion, is the flexibility that it offers because you can just sit on the line without using it so that you don't have a payment. And when you have an opportunity or a need presents, you can go ahead and draw from it. So unlike a cash out refinance in which you have to take all the money at once and you start paying interest on the whole new balance, you can do whatever you want with the HELOC whenever you want. So now that you know what it is and how it works, let's talk a little bit about the main items that you'll need to qualify. And the main thing with a DSCR HELOC is, well, the DSCR. So you'll want to have a DSCR of at least one, and that includes the payment on your house currently, plus the new payment on the HELOC. So this means that the property at least will have to break even. And the reason for this is because, well, the lender will find it extremely risky if you found yourself underwater on your payments every month. Now, next, credit scores. So the minimum credit score for a DSCR HELOC that I found available through our lender providers is 680. Obviously, you'll get much better terms with a credit score at 760 or more, which is considered prime credit. Now, finally, loan to value or LTV. And typically, lenders will allow you to have a loan to value or combined loan to value up to 75% for a DSCR HELOC. So if you own a property worth $600,000 and you have a current mortgage of $300,000, you have a 50% loan to value. If you were to max out the HELOC limit up to 75% loan to value, then the maximum amount of liens against the property will be 75% of $600,000 or $450,000. So therefore, the HELOC amount will be $150,000. Now let's talk a little bit about interest rates in terms that you'll most likely find with a DSCR HELOC right now. Now, most lenders will likely be pricing out a DSCR HELOC with prime credit in a loan to value between 60 to 70% at roughly 10% to 12% interest rate, variable on a 3-year draw HELOC. And DSCR HELOC interest rates will always be variable and they are going to move with the prime rate. Right now, the prime rate sits at around 7.5%. Now, let me explain how the draw and repayment period works with the DSCR HELOC. Most lenders that offer this program will be offering a draw period of 3 or 5 years. And depending on the one that you choose, this means that you'll have this period of time to use the HELOC or what we call the draw period. The repayment period is typically going to be 20 or 25 years. Now, during the draw period, your monthly payment required is going to be interest only. I always advise my clients to make a payment that is sufficient to cover the interest and a little bit more for the principal. At the end of the draw period, the HELOC becomes fully amortized to pay back the balance over the term. And believe me, you don't want to end up with a line of credit maxed out in a principal and interest payment, because that could destroy any cash flow that you have on your rental property. However, if in the future your equity position is still good and you meet the qualifications, you may obtain another DSCR HELOC to replace this one. So it will be kind of like refinancing the HELOC. Otherwise, you can do like a cash out refinance loan, combine both first lien and the HELOC lien. These options, you need to go ahead and explore them with your loan officer. Now, to get one of these loans, you want to apply with either a commercial non-QM lender or a mortgage broker that deals with non-QM lenders, because you'll have zero chance of getting a DSCR HELOC with a bank, a credit union, or a retail mortgage lender. I am a mortgage broker and I do a lot of these loans, so if you'd like to get some more information about your specific project, you can find my contact info in the description of this video. Or if you have any questions, just put it in the comment box below and I'll be sure to answer each one of you guys. All right, well, thank you so much for watching the video, and hopefully you found it useful, and I will see you again soon. Take care.